$1 million by 2038. In 8 years, we will be reaching roughly this $1 million number. And now, what does this actually mean for you? Let's take the normal salary of an average US citizen. It's about 70 to 60 grand. Let's round that up to 100 grand. If you have that, you shouldn't have any problems reaching 0.5 BTC. What does 0.5 BTC actually buy you? If Bitcoin, as we just said, goes to $1 million, in 8 years with 0.5 Bitcoin, you will have 5 times your yearly salary. Now, this might not be retirement money, but this is 5 years that you have in your bank that you can redeem at any time. That is true wealth. This is true time freedom. And this is the most important freedom you can possibly have. And this time freedom, thinking about wealth in a different lens, is what we are going to talk about with Alex today. Enjoy. How many Bitcoin do I personally need to acquire to be free?
I think there's 2 levels of freedom. There's the economic freedom, and that's related to the number of Bitcoin that you have. And I think there's the mental freedom. And I think mental freedom starts, maybe you don't have any Bitcoin or very few or have just understood Bitcoin. And I think more important than economic freedom is mental freedom. So the ability to step outside, the beaten path, step outside of the system, do things that you feel is better for you, that you really like. And you can have as much money or as many Bitcoin as you want. If you don't have the mental freedom, you're not able to do the step. So I think what Bitcoin does, it does both. It helps you to establish the mental freedom, and because of you're able to see the system, how it works from a little bit outside. You meet other Bitcoiners who have made the step, so who are a good example for you to follow. And then, of course, there might be some level of economic freedom. And I think economic freedom doesn't necessarily mean you can live totally off a very luxurious life off your Bitcoin stack. I think if you have enough Bitcoin to pay for like 6 months or a year of your expenses, that is already some freedom, because you can just leave a job that you hate, that you don't like, that's toxic for you. And you have the freedom because I don't need to work for 6 months. So 6 months, I mean, depending on your expenditure level, I think it's very, very little Bitcoin. And then fully financial independence, I think it depends on if you have a family, if you have a house, if you have a luxurious life. And then it depends a little bit on what you expect Bitcoin's going to do in the future. The power law tells us it's going to be 1 million in 8-9 years, in the mid-30s. So with 1 million and some appreciation in the future, maybe half a Bitcoin is quite a bit. Not today.
Yeah, this is always the controversy of, like, someone says like, oh, half a Bitcoin is a lot of money, but not today, but in 10, 20 years, it's like, it depends on your time frame. But I love the framing, because I think if we want to measure freedom, we have to measure it in time, because that's the only honest measurement, because it takes into account how many Bitcoin you have, what is your expenditure level, and how many months you can kind of live off that. It's like, what if you spend 1 Bitcoin a year, you probably need more than half a Bitcoin to be financially free. But if you spend 0.1 Bitcoin and you have 1 Bitcoin, that's a lot. Like, then it's like you have a runway of 10 years if Bitcoin stays flat and just like keeps up with inflation. If Bitcoin appreciates over the inflation, you actually probably have 15, 20 years, maybe more than that, maybe 30 years, depending on how a lot of appreciates, depending on how your expenses and income develops. So like, I really like the framing of measuring wealth, not in like dollars or Bitcoin or whatever currency, but in just time.
And opportunity, things you can do that opens up. So, there is freedom if you can take a 3-month sabbatical and travel the world, and you have enough savings to cover those 3 months, which is not not huge. Another example is, I think, freedom of opportunity, things to do and to learn. I was the first one in my family who studied. So because they all used to be soldiers and didn't study. So it was, with me, I had good grades, but it was really, really close because my parents didn't have much money. So eventually it was a combination of like my parents supporting myself, me working, and also getting scholarships. So what I did for my children, we saved enough so they're safe to study. So then I thought about their children, which don't exist yet, and it will take another 10 years before they have kids. And what we did, we reserved a rather small stack of the Bitcoin stack for our grandchildren who will maybe study in 30 or 35 years, and we reserved a small Bitcoin stack for them to be able to study. So what we did, we provided for them, Bitcoin provides them freedom to learn what they would like to learn, to explore their talents and get a really good education. So it's a very long-term decision, and we don't even know if we ever have grandkids. But so I think it's a tremendous aspect, like from my personal perspective, where it was really close for me to be able to study.
It's such an interesting thing because we have this amazing technology and we have this amazing asset, but it's very hard right now because people are looking at the last 2-3 weeks, at the last few months, and they're like, hey, from the all-time high, what I think October it was, we're down 50% roughly. And so when you think about the economic wealth and the economic freedom, it was basically cut in half the last like 8 months. So if you had a year, now you have only 6 months. If you had 2 years, you only have a year, and so on. How do you think about surviving or being in a bear market as a Bitcoiner?
It's a huge opportunity always. So I think the very special situation that we have with Bitcoin, we know these cycles, and the cycles have been repeating themselves quite in parallel. So it's a 4-year cycle, and we have a 3-year cycle to the all-time high. We have a 1-year cycle to the cycle bottom, and then it walks up back to the previous all-time high over 2 years, and then another year to reach the new all-time high. So that has been the pattern for the last, I think, 4 cycles. So that's not too many cycles, but amazingly, the October high was like the perfect pattern that the cycle describes. So if we believe the cycles will remain somewhat similar, not exactly, then we do know today 2 things. First of all, we know it's a good time to accumulate slowly, dollar cost averaging, so you take advantage of the lower prices. And we also know, and I think that's even more important, that the cycle is relatively short. So it's a 4-year cycle. And if you look at the stock market boom 2000, it took 13 years for the stock to finally pass the all-time high that they've seen in 2000. So it's a very long cycle. Japanese stocks who had an all-time high in 89, it took 35 years for them to come back. Gold in 2011, I think it was like more than 15 years for gold to come back to the all-time high that gold had shown in 2011. So what I'm saying is the Bitcoin cycle is tough because it's quick. It goes down quick. That's very tough. We just have experienced that. But it's not so tough because it goes up relatively quick again.
Yeah, and then I think people are super of like, oh shit, like we only remember the bad times. We only remember that like the last half year was really bad. We don't remember that just 5 years ago, 68K, whatever the top was, 69K was great. Was like we were flourishing. We thought we were going to 100K, we were going to 1 million, we're going to the moon. Now, just 5 years later, I mean, 5 years can be a long time, but it's actually not that long if you look at like a long time horizon on assets and how they progress. and 5 years later it's roughly the same price, and we think Bitcoin is dead. It's a horrible asset. And then people, of course, compare a local top 5 years ago to a local bottom right now. Like, yeah, it didn't do anything for 5 years, so it's a dead asset.
And also, I mean, there's competition. Last year we had a tremendous gold run that ended in January, and of course silver even more. And currently we have a tremendous run in AI stocks and semiconductor stocks, like the memory chip companies, SK Hynix and Samsung and Micron. I think they have quadrupled this year alone, and Bitcoin has lost this year, I think, 25% or so, and then the semiconductor stocks have quadrupled. So obviously, I mean, it would have been much better economically to sell all your Bitcoin in January and then move all the money to the semiconductor stocks. And there's always going to be some better investments. And I think psychologically, we make two mistakes. You mentioned one, like comparing the top to the bottom, which is always extreme. Maybe we should have it like a moving average price where we compare the tops to the bottoms. And I think there's a psychologically effect that if something goes up by 10%, we feel a bit more happy. If it goes down 10%, we feel a little bit more unhappy. And the net effect, 10 up, 10 down, is negative. And the net emotional effect is negative. The net economic effect is basically the same. So I think a solution to that is to not look at the price 5 times a day. Maybe to look at the price like once a month. It's tough. I can't do. I'm not there yet, but I think especially when you do dollar cost averaging, and you have a set, time frame, set amount that you save, it doesn't make sense to look at the price every day.
Yeah, it makes, like, most people have a salary that is not depending on Bitcoin. Most people then has just a DCA that they just like DCA into Bitcoin, and maybe you do some weighted DCA depending on your model of the power law, of the fear and greed index, of the 200-week moving average, whatever is your favorite model to track if it's kind of like a good price or like kind of a great price. So like, I think there's always a good price, but like is it a good one or is it a great price? And then you can just do the weighted DCA, and then you like don't really have to care about what the price right now is, like day to day. I mean, like 5 times a day is like very extreme. Definitely don't recommend that. But even like once a week is like almost enough, because yeah, of course it does something, but how much does it really do? It's like the 1 week it's down 5%, then it goes up again, then it goes down again. It's like you're very emotional. That like if it's I think very hard if we see something going down and up and we're following closely to detach our emotions from that. And you should, because as you said, if it goes up, you should be not as happy. If it goes down, you should be more happy because
Yes,
you
get more Bitcoin.
Yeah.
And so I think that the relevant question is, the big picture correct or is it broken? And the big picture in terms of money printing and inflation, and that's what Bitcoin is really about. It's like an inflation hedge. It's limited to 21 million. No one can change it. And then on the other side, the fiat currencies are being printed like crazy. Is that changing? And Elon Musk, he may be able to fly to Mars, and he's the first trillionaire and a great entrepreneur, and he achieved so many things that were impossible to imagine. So he was not able to achieve cost cutting in the American budget. So we do know for sure that's not the way they're going to succeed in getting control over the government spending and deficit. And the current discussion in Germany, which is tough, it's around more debt and more taxes. So it's not around cost cutting in the government administration. So we do know cost cutting might be the right way. It's not going to happen. So what they do is, of course, they raise taxes, but there's a limit to that. And then obviously what they will do is continue to print money. So the money printing aspect, it's at least unchanged. It's even getting worse. So we know the big picture for Bitcoin as a store of value in an inflationary environment is actually even more correct today.
What do you actually think about that? Because we talked about gold, we didn't talk about, but I had it in mind, the S&P 500 near an all-time high. We talked about all the IPOs, SpaceX. I mean, right now they are like suffering again a little bit, which I think was kind of expected, but it came a little bit earlier than I expected it. Then there's probably like OpenAI, like the Anthropic IPO. There's like a lot of IPOs coming our way. How does that all relate to Bitcoin, or if at all?
So it is competition for money. So if you have €100, I mean, everything you can do with €100 competes with each other. You can buy a steak dinner, you can go to an amusement park, you could just save it, or you can invest it in stocks or anything else. So everything is competing with everything else, and obviously with the past returns and maybe the perspective, it's very tempting to increase your investment exposure towards AI and everything that's connected to AI. And obviously that has been a very smart decision over the last few years, actually, or 2 years or so. I've been around in the internet stock bubble 2000, and I made some really good investments and I made some really bad investments. So what is a little bit similar, so the internet was just about to emerge as a huge infrastructure play for everyone. And there were quite a few companies that were also delivering infrastructure. And then everybody expected the internet to become really, really large, explode. But what happened that the infrastructure investment plays were delayed by whatever. And then some of those companies even went bankrupt. So of course today we think, well, we need computing power, infinite computing power. And in the long run, that's probably correct, but there might be a significant dip correction, overestimation of what we really need in the next 3 years, so that those companies might significantly correct. And especially with like commodity products like memory chips, if there's a correction in the demand, just less demand for whatever reason, with the commodity products, the price will fall quite a bit, and then accordingly the stock prices will fall. So there could be a significant correction in all those companies, very similar to what we've seen in 2000 with the internet companies. But then what we've learned from the internet, Amazon stock, by the way, they fell, I think, 2 or 3 times by more than 90% in the early internet days. And no one knows that. and people were like convinced that Amazon would go bankrupt. We do know now it didn't, but then there were other companies very similar to Amazon. One was Buy.com, also publicly listed. They went bankrupt, and no one knows them anymore. So I think it's not that unlikely that we will see a significant correction in the stock market in those sectors that have been performing really, really well. And then in the long run, of course, things might play out very favorably. And once that correction happens, the money that's now flowing away from assets like Bitcoin could flow back. And then that would be a perfect timing for the next bull run. So I'm quite optimistic that the competitive situation of other asset classes will not continue forever.
We Bitcoiners always preach not your keys, not your coins, but we're giving away all our data to the big tech servers. Your passwords, your identity, your accounts. That's why I personally switched away and started using Proton Pass. Everything is end-to-end encrypted, so not Proton and not anyone else can read your data. And look how simple this is. I just click here once on the login button and I automatically get the passkey sign-in from Proton. With just one click on it, I'm signed in. And of course, it also stores all the 2-factor authentication codes. And if my credentials ever show up in a data breach, it warns me so I can act very fast. If you care about holding your own Bitcoin, you should also care about holding the control of your own data. It's the same fight. And the best part is you're not sacrificing your convenience. It's privacy and security by default. And you can start start for free right now. And if you want to upgrade to Proton Plus, you get that for just $1 for your first month. Link is in the description and in the pinned comment down below. So go to proton.me/pass/Robin Seyr. Make sure you close your digital front door. It takes you 5 minutes and €0 to start with. Again, that's proton.me/pass/Robin Seyr. Just a side question. Do you think there's a comparison to be made between Bitcoin treasury companies and the .com bubble companies of like the internet, as they build on something similar?
Yeah, I mean, I think Pius Sprenger, he posted that a year ago, that the ICO boom of the like 2017 is the equivalent to the Bitcoin treasury company boom that we've seen last year. And that was the only thing that was really a little bit depressing in Prague, because a year ago, we were like at the all-time high of the stocks, of the reserve strategy stocks in Prague, and Capital B from France, the stock price was like 550. And last year and this year it was like less than 50 cents. So it had lost more than 90% of its value. And I think the question is open if they really come back. They will come back with a bull run. If the Bitcoin price appreciates, it will pull up the stock prices. That's clear. But the question really is, will the MNAV, the relation between the stock market valuation of those companies and the value of their Bitcoin stock, will it significantly come back? Will it come back beyond 1? Will it be larger than 1? And that might not be the case, because a picture that I've used, if you, like 100 years ago, if you bought prime property in Munich downtown at the English Garden, downtown park, it's the most expensive property in Munich. So 100 years ago, if you started to buy the property as a reserve asset, you have a company, you buy those properties, and you do nothing with it, then clearly, and you see that clearer with property, there's a negative cash flow attached to it. You need to build a fence, you need to mow the lawn, maybe there's some property taxes, and some issues you have to take care a little bit. And that negative cash flow clearly demands an MNAV below 1. So you have the company, and then the value of the property would be higher than the value of the company. And there's a good example also with venture capital, which I did. There's publicly listed venture capital companies, and very typically their market cap is below the net asset value of all their investments, significantly, 20 to 30%. So with those comparisons, if you don't do anything with the property at the English Garden, then it's a negative cash flow. It demands a MNAV below 1. If you do something with it, if you build hotels and you rent out the hotel rooms, build apartments, you rent out the apartments, then you generate cash flow, and that could command a higher MNAV than 1. But then from a Bitcoin perspective, doing something with your Bitcoin that introduces third-party risk, and it deviates from the pure Bitcoin philosophy. So yeah, I think there's a good chance that the MNAV will stay close or even below 1 with those reserve companies.
Interesting. I mean, the question is like, what can they really do with Bitcoin? Like if there's some that like do it with Lightning, but there's also a risk and a lower return, but at least there's something. And I think Strategy is trying to raise capital with their preferreds and all of those, but they don't really do something with their Bitcoin. They just like post it as collateral, or like not posted it, like they just say it's collateral, but it's not really connected.
Yeah, it's not connected. So the big picture is positive. Look, Bitcoin appreciates with a higher rate than the interest you pay on the preferred stocks. So obviously it makes sense. But there's a little break in the story, because in order to pay out those dividends, as you don't have an operative cash flow, you need to sell Bitcoin. And especially with Strategy, if they sold more than 32 Bitcoin, like 32,000 Bitcoin, we know it would be very difficult for the market to really understand. So it could trigger a significant sell-off, which then could undermine the confidence in the strategy stock and the preferred stock. So I think just building on Bitcoin price appreciation to serve the dividend or interest payments, I don't think it's going to work in the long term.
Yeah, and the volatility of Stretch has been not surprising, but I think a lot of people were surprised that it's like that bad. Like the people thought like it might hold better than it did, and you can clearly see it on Twitter with the reactions of like the people are like, oh wait, a thing that is supposed to be $100 now, what, 87? I think it went down briefly to like 82. Which either means the market wants a higher yield or the market doesn't like it at all. Like I don't know what to read out of it, but it's definitely entertaining to watch.
Exactly, and I have to admit, I bought a little bit. I mean, not tiny, but not huge of Stretch. When we traveled in the US in mid-May, it was at 100, and I mean the reason was to see how it works, what happens, how it works. So you get the interest payment every month and now bi-monthly. And another motivation was also to support the ecosystem a little bit. It's not a big support, of course, because the money is very little, but to support, to have some contribution to the ecosystem. And I sold it at 88 just last week because it was just not my turf. It's just not my field of expertise. I didn't really understand like the market dynamics, what could happen, because if people speculate against it, it could fall much deeper before it bounces back. And in the end, what I didn't really like is that it's like a little bit, it's not a Ponzi scheme, but it's a little bit, it's unclear how you generate the money to pay the dividend. So I just cut my losses and sold it, and I feel much better now. And in the end, it could not work in the long run. Maybe it works. I hope so, but it could not work.
Yeah, my thesis on Stretch, because a lot of people ask me, is if it works, it's amazing. Like if the volatility stays around, let's say 3-4%, like they will never achieve like perfect pegging to $100. I think that's unrealistic to expect. But hey, if we have an instrument that stays around maximum 5% volatility, that would be freaking amazing, because then you can park like medium-term cash in there, the cash that you don't need like next month, but maybe cash that you need in 8 months, 9 months. Because even if it's down 5%, you made it up with the dividend payment that you get twice a month. So like from a theoretical standpoint, as a Stretch investor, which I'm not, I mean, I technically have shares because I also wanted to see if I can get it in Europe and see how the thing is. But like, I think I collected €5 or something like that last time, so I didn't really. It's really not a lot, but it's like I lost my plot. But it's like if that is the case, if it works long term, then it would be great. But this kind of month showed us it might not work as good. And hey, maybe it's too young. Like I think it's 12 months or so old. So it's a very young instrument. So I think we might still have to see if it really works out in like 3, 4, 5, 6, 7 years, if it's around at that time. But if it works, I personally would love to park like medium-term cash that you might need in like 8 months in there, especially in a bear market.
So like I did venture capital for 20 years, early stage tech venture capital. And over those 20 years, we did like 800 investments. I was responsible for like 2/3 of that. And I was deeply involved in like 300 companies as the managing director of the fund. So, and over those 20 years, I developed a little bit of a skill to get a feeling on how the companies, the startups perform when I just see the founders. And it's not, I mean, it's not too difficult sometimes when they walk into the room, before the meeting starts, the way they walk into the room, like if the company performs really well, you can see it, you can feel it, how they enter the room, and it's like they're about to tell you that you were all wrong with all your critical questions, and they even overperformed like what they said. And if the performance is really bad, I mean, they walk in the room with their heads down, and it's, of course, it's not 100% correct, but it's like a little bit like around 80% good indication. And then, so last year in Prague, we had Alexandra from Capital B, we had Michael Seyr, and they were like beaming. Michael Seyr was, after his speech, he was taking an hour to talk to people, and I even could talk to him like for 3 minutes. We did a selfie, and he really enjoyed it. So this year in Las Vegas, he was on stage, he left. There was no chance to even talk to him for a second. He didn't do any selfies. And the same thing in Prague. It was not possible to talk to him like on his regular stage performance. And it was a little bit similar with like the other guys involved in the reserve companies. So I think they know they're close to a breaking point, and they're under heavy pressure. You can really see it. And I hope really that it's going to turn out really well, and maybe the Bitcoin bull run starts in the fall, and it pulls up the stocks, and it takes off the pressure from all the financing instruments. But you can really see that they are under very heavy pressure. And I think there was a talk, I didn't attend it, and Michael Seyr became almost a little bit aggressive towards critical questions that he got from the audience. So in the end, it's just holding Bitcoin and getting your life together like in other areas, and not, maybe it's a little bit of greed. We shouldn't get too greedy and be happy with some good performance on Bitcoin, and then do stuff that Bitcoin opens up to do.
Yeah, I guess that's the only reason you want to buy strategy is to outperform. Like now we have to distinguish, so it might get confusing. There's MSTR strategy, the common shares, and there's stretch. Stretch, I believe, will never outperform Bitcoin, or like at least I don't think it will ever outperform Bitcoin. Strategy might outperform Bitcoin, and since they adopted Bitcoin strategy, I think they're still outperforming Bitcoin. I'm not sure exactly, but like I think they still are ahead of Bitcoin when you measure it from the starting point of when they started accumulating Bitcoin. And so like the only reason you would buy MSTR stock in the first place is to get higher Bitcoin exposure, and so just like a little bit higher return. You put 1 Bitcoin in, you get 1.1, 1.3, 1.2 Bitcoin back. And so like if that's the only reason, as you said, then the only reason, and I like don't want to call strategy shareholders, and I'm also a strategy shareholder myself a little bit. I don't want to call strategy shareholders not greedy because that's not the full purpose of it. But number go up, like it being outperforming the Bitcoin can be the only reason you invest in strategy in the first place, because why else would you do it?
Exactly, and that creates maybe small, what I call local bubbles. So if you buy something because the number goes up, then you buy it, number goes up even more, and that continues for a while until it just reverses course. And then once it really has a reversed course, so number goes down, people sell it because number goes down. So quite the opposite. Then like a temporary local bubble deflates. And I think that's the wrong motivation. I mean, of course, investing is connected to I want to make good investments, or number go up is obviously with any investment an essential part of the investment. But especially with Bitcoin, we talked about freedom earlier. I think especially with Bitcoin, it's more than number go up. It's freedom. It's the ability to take some of your assets outside of the financial system. It's the ability to move across the globe and take some of your assets with you. It's it's access to a great community of great people. So I think, especially with Bitcoin, it's much more than just number grab. So that's why I think we should stick to Bitcoin.
Also, a fun thing that I just realized: Strategy went through the .com bubble, as we noticed before, or like talked about before, and now they're also in the Bitcoin Treasury thing. So their stock price, it looks super fun. If you, I'll just show it quickly on the screen. If you look from when they went public around my actually around my birth date, and so I'll quickly show this to you guys. This it just looks very fun. They like went public in 1998, and then like .com bubble, and then like there was a very long recovery. Like if you bought at the pinnacle of the .com bubble strategy, you had to wait all the way here to make some return back, and it's like looks similar again. I don't have any insights. It's just I think a fun chart to watch right now.
I know a guy. He's like in his, I think, early mid 60s, and he used to work for Strategy around the time of the .com bubble. And then back then he went to a divorce, and he had to split all the assets, and he had to sell his Strategy stock, and he sold it not right at the top, but a little bit before the top, but fairly high in hindsight. And then I think there was a party, a Strategy company party, and then he had sold because he had to sell because of the divorce. And then like a day or so before the party, the stock fell significantly. And before the party, he was like the bad and stupid guy who had to sell his stock. And then after the party, he was like the not smart guy, but the lucky guy, I guess. And he described the mood at the party, and it was very strange. Yeah. So if things are bubbly, and that could definitely be the case in the semiconductor AI space, it is a bubble. Maybe the bubble keeps inflating, and maybe it doesn't pop really hard. But if things are bubbly, they will come down.
Yeah. And that's a defining question, I think, for Bitcoin Treasury companies also. Like what is bubbly? Like what is? I mean, there was this famous thing where I think Jack Mallers in Prague asked, "What is MNAV and how to define it?" And Seyr actually gave an interesting answer, but a very long one. It was like I think like a 15-minute answer. And honestly, I personally think he did a kind of good job of explaining MNAV, because it's not as easy of like looking at the Bitcoin stack and looking at the share price, because they also have preferreds, they have the cash reserve, it's not like take this number, divide it, and like there you go, you have an MNAV. And so it's a complicated topic, but it is, I think, a defining question, and I can't wait for like going into future 10 years and seeing how it all shakes out, because it's so uncertain. And there's like, I have 800 podcast episodes, so I've interviewed the biggest strategy bulls ever. I interviewed the biggest strategy haters ever. You seem like quite neutral and like very based in the like, hey, maybe they make a bunch of money, maybe it's not successful, but it's fun to watch. And I just like, the MNAV question is really interesting. Do you have a take on the MNAV?
I'm neutral / positive. So the key indicator to watch for is there anything they can do with their Bitcoin stack, especially Strategy, because it's the biggest Bitcoin stack basically any company has in the world. So can they do anything with it that is value creating, and no one else can follow? So basically that would give them a monopoly on what they do. So I don't really have a good idea what they could do, but now that's the genius of being an entrepreneur. I mean, Michael Saylor or someone else in the company, they come up with a great idea, and then everybody goes like, "Oh, of course, clearly that's a great plan," and then the stock will appreciate depending on what they do. That the market cap of the company will be higher than the market cap of the Bitcoin. Without that, just using Bitcoin to issue preferred stocks or even credit or something in order to acquire more Bitcoin, I think that will not lead to a MNAV significantly larger one, maybe two. And a year ago, what we had with capital B, it was 8 or so, or even larger. That's clearly too high. Obviously, maybe 1.5 or something. I don't know, but I think the thing to watch out for is, do they anything with their Bitcoin stack that hasn't been done before?
Yeah, it's most strategy bulls told me around the MNAV of 4 or 5 at the height of the pinnacle of the bull market to invest, and I was like, a 5, it's not a 5x, it's a 500% premium or 600% premium that you then have to pay, and I'm like, I don't really think they're gonna accumulate so effectively in the future that that's a really good price to pay right now. And then it fell very sharply. And I think the first time I bought strategy was around MNAV of 1.1, 1.11, something like that. I'm like, yeah, that sounds better. And now I'm at least willing to learn about it and willing to see a little bit more about it. And I'm still learning. I'm still trying to figure that whole beast out, because it's a deeper topic than I'm used to in the TradFi world. And I don't know, there's this meme of I didn't come to Bitcoin to learn about MNAV and preferred stocks. I came to Bitcoin to get away from that whole system.
So one thought, and that's not my original thought, we do know that the fiat currencies are under heavy pressure. And we also know that it's really important for the US to keep the dollar as the world reserve currency. And clearly it's not backed with anything, or just maybe gold, maybe not, because we don't know if the gold is there. So and the thought is really, if they use Bitcoin to support the inherent value of the dollar, there could be a strategy to stabilize the dollar and make the US dollar stay the world reserve currency for a longer time. And the interest is huge. So if the US does that, then the Bitcoin stack that strategy has, which is huge, it could also be part of supporting, and that sounds a little bit contradictory, supporting the fiat system. Why is it good to support the fiat system? Well, we don't want to be there when the fiat system quickly implodes and all the government structure starts to fail. We see that in some places in the world where the fiat currencies are getting worthless, and it's not a nice environment, especially for the people. So using Bitcoin to support the fiat system, not kill the fiat system, could be one of the things that attach a higher value to the Bitcoin stack than just the price. So it could be very positive. And I know the hardcore Bitcoiner now say, well, Alex, that's not the purpose of Bitcoin. The purpose of Bitcoin is to get rid of the dollar, get rid of the fiat system. Maybe in the long term, but I think it depends on how that plays out, because we've seen it all over the place. If the fiat systems fail, it's bad for 80-90% of the people, and bad is really bad.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups, because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean. No account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I mean, that's why I think a lot of Bitcoiners are mad at strategy, because I see more people mad about strategy that are not invested in strategy than the people that are invested in strategy. And those are usually mad about it because they think strategy is ruining the narrative or the actual intention of Bitcoin, the pure purpose of Bitcoin, of like doing kind of central bank gaming, if I can call it like that. Is that kind of like what they're trying to do, of like almost being a private bank giving you a yield and cashing in on the Bitcoin returns?
What's the question?
If they have a shot at being a small central bank, basically.
Yes, and that could be a path forward for strategy, because like last year in Prague, they said the Bank of England was basically a gold reserve company. The Bank of England was set up to accumulate gold and issue banknotes, and that basically was like the British pound being backed by gold and silver initially. And yes, the Bitcoin reserve strategy could turn into central banks. The key question really is, would politicians who depend on money printing, would they really support that, or would they regulate and tax it and restrict it? But yes, I think that on a very positive note, I think if we do believe, and I think we do believe that the fiat system has serious flaws, and inflation is much higher than we think, and has much more adverse effects than we understand. So on a positive note, I think using the Bitcoin stack to stabilize the financial system and significantly reduce the negative effects of inflation, I think that could be a great purpose. And then maybe strategy could morph into a player that becomes much more valuable. Yes, clearly there's huge upside.
What do you think is on a taxes note? What is Bitcoin's impact on taxes and the ability to print money for governments? Do you think that really takes away or like limits the ability to print and tax people as Bitcoiners would like to see it?
Well, taxes and Bitcoin in Germany, at least, the more leftist parties, they hate, or they used to hate Bitcoin, up until recently, where they discovered that Bitcoin could be a vehicle to raise taxes. So they didn't like Bitcoin. It used energy, and it was like they were not part of it, so they didn't make any profit, so they hated it. But then recently, a discussion started around raising taxes on Bitcoin profits. So in Germany, so far, if you hold Bitcoin longer than a year, it's tax free, like gold and antiques and things. And then all of a sudden, from a politician view, well, Bitcoin is great because if it appreciates, we can generate some taxes. so it changed like more towards a positive way. And I think a gold-backed currency in the past, or maybe tomorrow a Bitcoin-backed currency, is like a leash that prevents politicians from running away with their government expenses. So another leash is the capital markets. So if they have too much debt, then the interest rate goes up, and then they cannot take on more debt. And maybe the third leash is like in the elections, people don't like it if the government is too much in debt. And basically what the governments did, they cut all the leashes. They cut the leash towards the gold leash towards the fiat currency, latest in 71, that was cut. The leash of the capital markets is being cut by the Federal Reserve, the reserve banks printing money, buying the government debt. And then the leash to the voters is maybe a little bit cut. If you start cost cutting like Elon Musk did, then then he gets killed by the press and he's like demonized. So I think, and why is that? Because the politicians don't want to have any leash. They want to do what they want and spend how much they want. So reintroducing the leash that limits unnecessary government spending, I think, is a very, very, very tough exercise. I don't really see it coming, and that's why I'm in the end very bullish on Bitcoin continuing its price trend upwards. But then maybe being like strategy together with the US government, maybe reintroducing some leash, sound money into the fiat system, and thereby saving the fiat system or preventing its collapse. It could be very positive. If you look what the Trump administration does, like the war and spending and all of that, I don't, it's going to be. I doubt it that they will ever accept the leash.
It's so interesting because you said it before with Elon Musk. Like, he achieved all those amazing, impossible things, especially for one human being. Like, he could be 10 very successful human beings in one person with all his companies. I mean, even his smallest companies, like the Boring Company, things like that don't get as much press, that it on its own would be huge as a success story for a person. And he did not succeed in cutting government spending, even though he spent a lot of money on the election process, on the candidate, and put a lot of his personal brand into it, which kind of cost him, I think, a lot of energy and a lot of bad publicity. People that previously loved Elon Musk and loved Tesla, like, hated him later on. So getting involved politically definitely didn't benefit him. He probably, I don't know, maybe there's some backstory of like SpaceX and like he needs government contracts, like all of those things. But I think overall, I don't think he got so much benefits out of like being politically exposed publicly and being there with Trump all the way. But yeah, it's interesting that not even him could do anything to stop government spending. It's that I think Lynn Alden puts it best: nothing stops this train.
Yeah. So yes, and that's what I mentioned earlier with like the environment for Bitcoin, money printing, and also connected to that, financial instability. Once in a while, the banks fail or capital markets go berserk and stuff. So I think the big picture for Bitcoin is more than intact. So I think we should take Bitcoin as it is. It's just a wonderful asset outside of the financial system. No one can influence it, and we should just take on Bitcoin, and not just for the price appreciation, but also with everything that comes with it: freedom and friends and many things.
I almost forgot about it. You brought out the book Honest Money, and this is I was, when I saw the title, I was like, that's so genius of a framing for Bitcoin. I haven't even read the book, and I was like, I love that framing, and I was almost baffled of like, why is that not a more popular thing in Bitcoin how to frame Bitcoin, because it is honest money. How do you think about honest money, and then what kind of is like your main thesis around your book?
So for me, I mean, Bitcoin is many things. It could be like the high-tech money. It could be like the high-performance money, the new money, the independent money. So many things. So for me, it's honesty. So, and I think honesty in general is very important. So if you want to leave the room and then you think there's a door, but there's no door, there's a wall, and if you're not honest, if you're not saying, well, there's no door, I cannot, and then you bang your head all the time. And that's what's happening all over the place with dishonesty. You don't see reality how it is, and you bang your head on the wall all the time. So, and why is Bitcoin honest? Well, first of all, it's open source. So you can see how it works to its very detail. And it's very transparent. You can look at it and you see like the inflationary regime, like every 10 minutes, there's a new block, and then there's a block reward, and the block reward gets cut by half every 210,000 blocks, roughly 4 years. So the inflation regime is not transparent right now, it's transparent forever, until there's no more than 21 million Bitcoin. So that's honest. We know the upper limit in the year 21, 30, 40, something. And also it's honest because the checks and balances of the people involved, like the miners, the nodes, the developers, are set up in a way that no one can change the rules. So there's no human element of dishonesty in the core technology. So that's one point. And then the other point, and I've been wondering about this for a long time. I mean, the reserve banks say we want to have, our job is to have a stable currency, like stable euro, stable German mark, stable Swiss franc, stable dollar. And we define stability by a 2% inflation. That is so dishonest, because they could say we want a slightly unstable currency. We thought about it, and there's many PhD papers and professors, and we came to the conclusion that a 2% inflation, a little bit unstable currency, has so many advantages, and that's why we pursued it. But they say we want to have stable currency and define stability by instability. It's so dishonest. And then also the way they calculate inflation, they have several tricks where they adjust the basket of the products that they use to measure inflation. It tends toward reducing inflation figures. So in February 23, for a speech, I looked at the official inflation figures, and they were like for the fall of 22, they were like at 10%. And for some reason, I worked on the speech 2 months later in April, and then for some reason I looked up the figures again, official figures of inflation, and for the same months in late 22, where the inflation used to be like 10 point something percent, the official figures were like 8 point something percent. So they were just lower. And why were they lower? They had just adjusted the basket of goods that they used to measure inflation in a way that inflation was lower. So those adjustments of the basket happens every 5 years. And in that case, it was an extraordinary adjustment of the basket. So we don't know exactly if that's dishonest, but we do know all the adjustments and the way they calculate it lead to lower inflation figures. So I think there is a huge element of dishonesty in there. And that's, I think, a little bit natural, because we as humans, how we work, we tend to be dishonest, and dishonesty really helps us getting along with each other quite a bit. So yes, it has many advantages. So if you wake up in the morning and then your partner asks you, how do I look? Or so, and if everyone would be honest, maybe you would say really, really bad. It's strange. So then maybe you would get on a very slippery slope, damaging the relationship. But then you say, well, I still love you and you're great and very attractive. And if you look at so many situations where we interact as humans, being a little bit dishonest makes it work better. So of course also you can benefit from this honesty and get some advantage. It's a little bit economical. A small lie is very little effort, but maybe a huge return because you get something. So I think it's part of our human nature to be dishonest. So what Bitcoin does, it cuts out the human out of the core technology, and that's what makes it honest.
Isn't there, what was the movie called? Is it Liar Liar? Yeah, it's Liar Liar with Jim Carrey, where he can't lie for 24 hours or something like that. And it's a hilarious movie. But if you really think every interaction, everything, you have to be 100% honest, and honest means every thought that comes to your mind, you have to speak out loud. You will be very unpopular within 2 days, and most people will hate you. I think this is, I don't know, like it's a very hard thing to be like very honest. There's a lot of filters on us. Have you ever been on a party where there's like small kids also? Small kids tell very honest thoughts because they don't have those social filters in front of them. And they just say things, and everyone is laughing because most people thought about it, but they haven't they haven't said it, and the small kid is just like saying it out loud what everyone thought in the room. So I like that's why I smiled when you said like this honesty sometimes holds relationships and groups and the social construct together.
Yeah, totally. And we talked about the Bitcoin price, having been cut down in half in the last 8 months, and it's unpleasant, but it's a very honest free market. How the price is found. It's a very high volume market every day, 24 hours around the clock. There's no holiday. You can trade Bitcoin every day, and in a way, I like the price fluctuations also downwards because it's just honest. It just tells you there's more supply for whatever reason, then more demand, and there's no price fixing. There's no apartments in Berlin because and many areas in the world because there's rent control, and the rent price is fixed, it's controlled, and then of course the supply suffers, and people who are looking for an apartment have hard times finding any or have to pay like money on the side and everything. So it's a free market and an honest market. So the price fluctuation is not pleasant, of course, but it reflects the honesty of the free market Bitcoin is operating in. So from that perspective, I think it's a very good thing.
Yeah, it's the truth. It's the honesty of the market. And I also love that you brought up the 2% inflation thing, because they always say 2% inflation is good. And I always think, like, first of all, it's not 2%. And it's also not good, even if it would be 2%, because even if you calculate how much you lose with 2%, it's a lot over 10, 20, 30 years. And so saving in it is just ridiculous, because you are losing a lot of purchasing power over 5, 10, 20 years, even with just 2% inflation. And then you have to calculate your real inflation and just make that exercise of like, what are the things that I want to buy and how expensive were they 10 years ago? I would almost certainly say for most of people, it's more than 2%.
Yeah, there's a very famous example I'm using quite a bit. It's also in the book. 40 years ago, when I was a young boy, I was delivering newspapers. I made 10 marks per hour, and the ice cone in Germany back then was like 0.3 marks. So from 1 hour of work, 10 marks, I could buy 33 ice cones. And today, you make maybe 12, maybe 14 euros delivering newspapers, but the ice cone is like close to 2 euros. So you get like 6, 7 ice cones for 1 hour of work. So even if the exact figures might differ slightly, but the big picture is very clear: 33 ice cones 40 years ago, and then like 6, 7 ice cones today. So that's a reduction of like 80%. And that's what's happening with inflation. And that's the very negative of the dishonest inflation. Like, for whatever reason, especially at the lower end of the income scale, that the salaries don't follow inflation, and in the end you get less goods for your time, for your life that you're expending to buy stuff. And the average inflation rate of ice cones in Germany over 50 years is 6% per year. And the M2 monetary expansion inflation since the euro was introduced is like also, it's a little bit less than 6%. It's like 5.something%. So the ice cone, you could argue, of course, it's not representative, and maybe the ice cone got a little bit bigger. We don't know. Yeah, well, maybe, but it correlates strongly with the monetary inflation of M2 in Europe.
Really? That's crazy.
Yeah. And maybe back to my book. What makes the book a little bit special? I found a a way to explain Bitcoin without talking about Bitcoin. So I have a number of stories that I'm using, and then I make the connection to Bitcoin. And one of the dishonest stories in the Second World War, my grandfather on the father's side, he was a retired general. So he was sitting at home, and it was like not nice. Like three boys were in the, or four boys were in the army. Two died, and it was tough times, little money. And then there was a bottle of schnapps, and my grandmother was like, no, we don't drink the schnapps, because we keep it for a special occasion. What my grandfather did, and that's the story I'm telling, he cheated. He had a sip of the bottle, and then he refilled it with water. And then and nothing happened, of course. And then he did that again. And at some point, the schnapps was so much diluted that it was basically worthless, and they threw it away. And there was a big fight. And that's what my father told me, stories from the past. But then I tell the story, and I make the connection to Bitcoin, and fiat currencies are being diluted in a very dishonest way, like cheating on the schnapps bottle, cheating on creating new money, telling the story, I didn't do it, it's not doing any harm. And then in the end, the schnapps was worthless, and in the long run, the fiat currencies are worthless. And so, and there's more stories like that. And the point is, why is that really helpful? When you start explaining Bitcoin to people, the typical reaction is to reject it, because of money printing, and it's illegal, and it's volatile, and all of the things that are maybe negative. But if you tell a story, it's an interesting story. You listen to the story, and then making the connection that Bitcoin cannot be diluted, fiat currencies are being diluted, then you cannot reject it right away. You have to follow the analogy, and that you're almost forced to understand Bitcoin. And that really explains a little bit the success of the German book, which was launched in the end of May last year. And then the Bitcoin magazine picked it up and said, well, we've been looking for such a book that very easily explains in a very non-technical way, in a very welcoming way, the properties of Bitcoin.
And it's not only currencies. I think, like, if you think about all the assets, they are getting diluted more than Bitcoin. There's like obviously assets that get less diluted. There are assets that get more diluted. But real estate, gold, stocks, everything is getting more diluted than Bitcoin. Bitcoin is the thing. It's the schnapps bottle that has the least amount of water in it.
Yes, and a very good example is diamonds. So I used to buy my wife a diamond engagement ring 30 years ago, and it was tough because it's expensive, and I was finishing my PhD, had very little money, and I gave her the diamond ring. So what happened in the last 3 years? The prices of diamonds collapsed, and they collapsed because artificial created diamonds are hardly to distinguish from like original diamonds. They're like extremely high quality, and like for the non-professionals, you cannot see a difference. So basically, the supply of diamonds has increased artificially, and well, high supply, low prices. And I think the asset class diamonds is dead forever. It's just gone. And that really shows what happens if you can, at low cost, increase the supply.
Yeah, like the artificial diamonds. I also got engaged fairly recently. They are so much cheaper, and you have no way of knowing if it's like normal eyes. Someone might get the difference if he looks close in. He knows what he's doing. But I looked at both of them, and I looked at the real ones, and I looked at the fake ones. I'm like, there's no difference. Like it's like absolutely like they look both the same to me, just that the one is about 10% of the cost than the other one.
Yeah, so what you did, hopefully you bought the artificial diamond and said, honey, this is a great diamond, but it comes with a Bitcoin wallet, and the Bitcoin wallet made up all the difference. So the good thing is the combination of both will increase like the real diamond did in the past.
Yeah, like to like save on the real diamond, put 10% in the fake diamond, an artificial one, and put 90% in Bitcoin, and cover the marriage expenses in like 1 year from the appreciation of the 90%.
Yeah, and for the long term, I mean, for the education of your kids or your grandkids and everything. So I think, yeah, and we do know in the past, if people had to flee their country, diamond was the best store value because it's very low or high density of value, low weight. You could carry it along, and you could even hide it quite easily, and that's gone. So I think Bitcoin is a natural replacement for diamonds as a store value. And I do have to make the point, giving women a diamond ring has an effect, a very positive effect.
That's an interesting a learning point for Bitcoin podcast, but we have a lot of time actually. I have a question that I ask all of my new guests on the podcast, and it becomes more rare actually that I get new guests, not repeating ones. And the question is, what can we learn from you besides Bitcoin?
Besides Bitcoin, so I used to be, as I mentioned, a almost 25-year venture capital investor. So it came from a fascination of technology, and today I think most of the people are fascinated by technology. Especially with a smartphone, everybody has a high-tech device in their hands. They're using it every day for many things. So I think what you can learn is the experience I made financing innovation. It's tough, like because many startups, like around half of the startups, fail, but those who make it make a huge difference in any field, in the industrial field, in the medical field, biotech, and also in the software field. So I think being open for innovation, which will not stop ever. Now there's going to be more and more innovation. We're not done innovating. In fact, I think we're accelerating. Being open for innovation, embracing innovation isn't easy because many innovations fail or don't live up to their promises, but then those who make it change the world. And I think what I would like to tell is like a true fascination for innovation and a huge optimism that innovation keeps improving the world in so many dimensions for not everyone on the planet, but for like 90% of the people on the planet. And that's what I can see if I look back like 20 years or 30 years, life got better. Not for everyone, but for most people. And the key driver is innovation. And innovation creates so much value that like the value destroying activities are overcompensated. So the pessimism we might have looking at politics all over the world and other global trends like global warming, and there's many negative things, yes, but everything that we see which is negative will be overcompensated by innovation.
I love that. It's like if you, I really like the conversation. We touched on the bear market. We touched on honest money. We touched on giving diamond rings and marriages, and now we close it in like innovation and being open to new developments. I really enjoyed it. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is, and the previous guest asked you the question: how are we going to reconsider our relationship with debt when AI is bringing a deflationary world?
Yeah, that's a very good question, and that's the reason why the central banks and the governments push for inflation, because in a highly indebted world, deflation increases the debt and makes it more difficult to service the debt, and could lead to a downward spiral that could lead to a collapse. I'm not so sure if AI really, really creates a deflationary world. It will increase productivity, but then we as humans, we always found new things to do, to explore, and our needs have increased accordingly. So if there's more productivity, we can have more stuff, then we have more needs, and then we need even more stuff. So it still could be demand outpacing the supply, even if the supply is increased significantly to AI. And then we have all the government spending and all of that. I'm not so sure if the world really will be inflationary, even if AI is highly productive. But then, of course, if it is, then we're going to re-experience what happened in 1929, a collapse of the system, which is bad, very bad, but then maybe an opportunity to set up a new, very sound system. And then Bitcoin could be part of that.
In any way, if you hold Bitcoin, you already will experience a deflationary world over the long run. Maybe not for next Tuesday, but for the Tuesday in 2027, 2020, 30, 2040 ish, where prices are going down if you determine them in Bitcoin.
And we used to live in a deflationary world, like in the 1800s, under the pure gold standard. And basically what happens, increases in productivity lead to lower prices. And that's good because we are more careful spending. We don't have to spend quickly our money because it's losing value tomorrow. We can take time and think about how we really want to spend money. So I think a deflationary world is not necessarily bad, unless there's lots of debt that becomes unserviceable in a deflationary environment. So in the end, if there's a strong deflation driven by huge productivity increases, indeed, then the fiat system will, I guess, collapse a little bit.
It will be exciting. I'm a very optimistic person, and I'm really looking forward to the developments that Bitcoin, AI, and the great minds of our times will bring in the next 10 to 20 years. I think it will be a fun time to be alive.
Oh, for sure. And as I said, innovation will improve the world, our lives, and will create many, many benefits. We have to be a little bit smart in how to use inflation and what to do with it. But I think in the past we did manage, and I think it's going to be very exciting.
Really cool. Thank you so much, Alex, for being on the podcast. Before I let you go, where can people find you, ask you questions, and reach out to you?
I'm just do it, Alex, on all the messaging apps like Signal and Telegram, and also on X. Just do it, Alex is my handle, and so happy to reach out. I'm mostly active on X, so just send me a direct message. Just do it, Alex. And yeah, if you, I'd be happy to sign a book. If someone wants to have a book, I can send you a signed copy.
Awesome. Thank you so much, Alex, for being on the podcast. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.